You're scrolling through Facebook Marketplace at midnight, and you see it, a beautiful leather couch for $1,200. Great condition, barely used, from a nice neighborhood. You think, that's a good deal, and you keep scrolling. Meanwhile, someone else is looking at a water-damaged couch from a foreclosure sale for $50, seeing the exact same brand, doing mental math, and they're about to make $800 this weekend. Same couch, different lens, completely different financial outcome. My name's Ron, and I spend way too much time thinking about why wealthy people seem to operate in a completely different economy than the rest of us. If you are someone who's been taught to buy quality and you get what you pay for, but you're still wondering why your bank account isn't growing the way you want it to, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Because today we're talking about something that's going to flip your entire relationship with money upside down. Here's the thing, and I mean this in the nicest way possible. Most of us have been completely brainwashed about what constitutes a good deal. We've been taught that buying new is safe, buying broken is risky, buying damaged goods is for people who can't afford better. And this mindset, this exact way of thinking, is one of the biggest wealth gaps between people who build assets and people who just buy stuff. Look, I get it. When you walk into a store and everything is shiny and new and comes with a warranty, it feels good, it feels safe. But here's what most people don't realize. That feeling of safety, you're paying a massive premium for it. And wealthy people have figured out how to flip this entire equation on its head. Let me give you a statistic that's going to blow your mind. According to a 2023 study by the National Association of Realtors, the average foreclosed home sells for about 20 to 30% below market value. We're talking about a $300,000 house going for $210,000 to $240,000. That's $60,000 to $90,000 in instant equity before you do anything to it. But here's where it gets really interesting. Most of these foreclosed properties, they're not destroyed, they're not condemned buildings. About 65% of them just need cosmetic work, paint, carpet, maybe some landscaping, things that cost $5,000 to $15,000 to fix. Do the math with me here. You buy a house for $60,000 under market value, you put $10,000 into it, you're sitting on $50,000 in equity the moment you finish. You didn't create value out of thin air. You bought a problem that scared everyone else away, and you solved it for cheap. This is the game wealthy people are playing while everyone else is arguing about whether they can afford the down payment on a retail-priced house. Now, you might be thinking, Ron, this sounds great, but I don't know how to fix houses. I'm not a contractor. And that's exactly the mental block I'm talking about. Because here's the thing, wealthy people don't know how to fix houses either. Not most of them anyway. What they know how to do is hire someone who does, and they know how to do math. Let me break down the real skill here. It's not carpentry, it's not plumbing. The real skill is the ability to look at a broken thing and see opportunity instead of risk. That's it. That's the whole game. And this applies to way more than just real estate. Let's talk about cars for a second. According to Kelley Blue Book, a car loses about 20% of its value the moment you drive it off the lot. Everyone knows this, right? But here's what most people don't realize. A car that's been in a minor accident loses an additional 10 to 15% of its value even after it's been fully repaired. Think about what that means. You can buy a 3-year-old car that was in a fender bender that's been professionally fixed at a body shop that drives perfectly fine for 30 to 35% less than the identical car with a clean title sitting right next to it on the lot. I know a guy, real person, not making this up, who's been doing this for 15 years. He buys salvage title cars that have been repaired, drives them for 2 years, sells them for almost exactly what he paid, and essentially drives for free. His transportation costs over the last decade, basically just insurance and gas. Meanwhile, the average American spends $525 per month on a car payment, according to Experience 2024 data. That's $6,300 a year. Over 10 years, that's $63,000. Same transportation, different strategy, $63,000 difference. This is where we need to talk about the psychological shift that happens when people start building wealth. Because it's not just about being cheap. It's not about being willing to buy junk. It's about completely rewiring how you see value. Most people see a broken thing and think, this is broken, it has less value. Wealthy people see a broken thing and think, this is broken, everyone else is scared, that means I can buy this way less than what it'll be worth when it works. Look, here's what most people don't realize. The word broken is doing a lot of heavy lifting in our minds. We use the same word for an iPhone 13 with a cracked screen that works perfectly fine as we do for a phone that's been run over by a truck. These are not the same level of broken, but the market often treats them similarly. I saw an iPhone 13 on eBay last month, fully functional, just a cracked screen, $180. A replacement screen costs $40 on Amazon and takes 20 minutes to install if you watch a YouTube video. That same phone with a pristine screen, $450. You just made $230 in profit for 20 minutes of work and $40 in parts. That's $690 per hour. Show me a job that pays that and I'll wait. Now let's scale this up, because this principle works at every level. The distressed asset market in the United States is absolutely massive. We're talking billions of dollars in merchandise, real estate, vehicles, equipment, everything. Here's a specific example. Amazon returns. Amazon deals with about 15 to 30% return rates on products, depending on the category, according to industry reports. That's hundreds of millions of items every year. And Amazon doesn't want to deal with these, so what do? They sell them in bulk to liquidators, pallets of returned items for pennies on the dollar. There are people running entire businesses buying these pallets for $500 to $1,000, sorting through them, testing what works, selling the good stuff individually, and making $3,000 to $5,000 per pallet. It's not glamorous, you're not going to put this on Instagram, but it's real money for real work, and the only barrier to entry is that most people think it's beneath them. And that's the thing. Your ego is expensive. Your need to only buy nice things, new things, undamaged things, that's a luxury belief, and it's costing you a fortune. Let me take you deeper into foreclosures, because this is where the really big money is, and it's where the psychology gets most interesting. According to ATTOM Data Solutions, there were about 135,000 foreclosure fillings in the U.S. in 2024. Each one represents a story, usually a sad one, but also an opportunity. And I know that sounds callous, but here's the reality. That house is going to be sold whether you buy it or someone else does. The previous owner is already out. You buying it doesn't make their situation worse. What it does is give you access to below-market real estate. Now, here's what most people get wrong about foreclosures. They think these are disaster properties in terrible neighborhoods. Sometimes, sure, but you know what causes most foreclosures? Job loss, divorce, medical bills, normal life problems happening to normal people in normal houses in normal neighborhoods. I'm talking about 3-bedroom houses in a decent school district that need paint and carpet. That's it. The bank doesn't want to own this house. They're not a property management company. They want it off their books, so they price it to move. Let me give you real numbers from a real deal I saw last year. House in a decent suburb, comparable homes in the neighborhood selling for $385,000. This one goes into foreclosure, needs about $12,000 in cosmetic work. I'm talking paint, flooring, maybe update the light fixtures. Bank lists it at $295,000 because they want it gone. You buy it, you spend the $12,000, you're all in at $307,000. You just made $78,000. And if you rent it out while the market appreciates, you're building equity and cash flow at the same time. This is not hypothetical. This is happening thousands of times every single month in this country. The only question is whether you're the person doing it or the person watching other people do it while you stay comfortable buying retail prices. Let's talk about something most people never even think about: business liquidations. When a restaurant closes, when a gym goes out of business, when a company downsizes, all that equipment has to go somewhere. Commercial kitchen equipment loses about 50 to 70% of its value the moment it's used, even if it's in perfect condition. A $10,000 commercial oven becomes a $3,000 oven at auction. Not because it doesn't work, not because there's anything wrong with it, but because the market for used commercial equipment is small and businesses need cash now when they're liquidating. There are people who've built entire businesses around this. They buy commercial equipment at liquidation sales, clean it up, and resell it to new restaurants at 40 to 50% of retail. They're making money on both ends, buying low from desperate sellers, selling at a discount to budget-conscious buyers, and everyone wins. The equipment is the same, the functionality is the same. The only difference is the context and the story. And if you're willing to separate the thing from its story, there's money everywhere. Here's something that's going to sound crazy, but stay with me. Dented appliances. Big box stores, Home Depot, Lowe's, Best Buy, they sell appliances with cosmetic damage at 30 to 50% off. We're talking about a refrigerator that retails for $2,000 that has a dent on the side that you'll never see because it's going to be against a wall anyway. They'll sell it to you for $1,000. Now, you might be thinking, Ron, that's just buying a dented fridge. How is that a money-making opportunity? Here's how. You buy the dented fridge for $1,000, you use it in your rental property. In 3 years, when your tenant moves out, you sell it on Craigslist as $600 as a used but working appliance. You just got 3 years of refrigeration for $400. The person who bought the retail version for $2,000, after 3 years, it's worth maybe $800. They paid $1,200 for those same 3 years of refrigeration. You paid $400. Multiply this across every appliance, every piece of furniture, every tool, every asset you buy over a lifetime, and you're talking about hundreds of thousands of dollars in savings. This isn't extreme couponing, this is strategic asset acquisition. This is where it gets really interesting, because what we're really talking about here is information asymmetry. That's a fancy economics term for, I know something you don't know. When you see a broken thing, you see a liability, you see risk, you see hassle. When someone who's been doing this for a while sees a broken thing, they see specific numbers. They know exactly what it costs to fix it, exactly what it's worth when it's fixed, and exactly what their profit margin is. That knowledge, that ability to assess value in things other people are afraid of, that's the real asset. The broken stuff is just the vehicle. And here's the beautiful part. This knowledge is not secret. It's not locked away. Everything I'm telling you, you could learn this weekend. YouTube videos on how to fix things, eBay completed listings to see what stuff actually sells for, Facebook Marketplace to see what people in your area are buying. It's all right there. The barrier isn't information. The barrier is psychology. It's your willingness to be the person who buys the broken couch, who bids on the foreclosed house, who shows up to the estate sale on the last day when they're damn near giving stuff away. Now, look, I can already hear the objections. This sounds like a lot of work. I don't have time for this. What if I buy something and I can't fix it? And you're right, it is work. It does take time. And yes, sometimes you'll make mistakes. But let's be real about what we're comparing this to. You know what else is work? Working an extra 5 years before you can retire because you spent your whole life paying retail prices for everything. That's work too. It's just work you don't see because it's spread out over decades. You know what else takes time? Sitting in a job you hate, trying to earn enough money to buy all the new, shiny, perfect stuff the society tells you you're supposed to own. That takes time too. The question isn't whether this takes work. The question is, which kind of work do you want to do? The work of finding deals and fixing things, or the work of grinding away at a job to pay premium prices for everything? And here's what most people don't realize. This scales. You start small. You buy a broken laptop on Craigslist, fix it, sell it for profit. You learn, you get better, you understand what good deals look like, you develop an eye for value. Then maybe you buy 2 laptops, then 5. Then you're buying pallets of returned electronics. Then you're buying a foreclosed property. Then you're buying a second one. Each step builds on the last. According to a 2024 report from IVASworld, the used goods retail industry in the U.S. generates about $17.6 billion in revenue annually. That's billion with a B. This is not a side hustle. This is not a hobby. This is a legitimate path to wealth that most people completely ignore because they've been taught that buying broken things is what poor people do. But here's the twist. Buying broken things cheap and fixing them is what rich people do. Buying new things at retail prices and watching them depreciate is what keeps people poor. Look, here's the fundamental principle that explains all of this. Wealth is built by buying assets that appreciate or produce income. It's destroyed by buying liabilities that depreciate and cost you money. When you buy a new car at full price, you're buying maximum depreciation. When you buy a slightly damaged car at a discount, you're buying reduced depreciation. Same utility, different wealth trajectory. When you buy a foreclosed house below market value, you're buying instant equity. When you buy a retail-priced house at the top of the market, you're hoping for appreciation that might not come. Every single financial decision you make is either moving you toward wealth or away from it. And the uncomfortable truth is that most of the decisions that feel safe and normal and what everyone does are the ones that keep you broke. Buying broken things isn't about being cheap. It's about refusing to pay the premium that everyone else pays for the privilege of not having to think, not having to learn, not having to do a little bit of work. So here's what you're going to do if you actually want to apply this. Step 1. Pick one category. Don't try to do everything at once. Maybe it's furniture, maybe it's electronics, maybe it's tools. Whatever you use or understand or are interested in, pick one thing. Step 2. Spend a week just watching the market. Check Facebook Marketplace, Craigslist, OfferUp, estate sales, liquidation auctions. Don't buy anything yet, just watch. See what things sell for. See what damaged or broken versions sell for. Get a feel for the numbers. Then, when you see something that's clearly underpriced because it has some kind of problem, do the research. How much would it cost to fix? What would it be worth fixed? What's your potential profit margin? Step 4, start small. Buy one thing. Fix it or clean it or restore it. Sell it. Learn from the experience. You're not trying to make a fortune on your first deal. You're trying to prove to yourself that this works. Step 5, repeat. Do it again and again. Get better, get faster. Learn which deals are worth your time and which aren't. This isn't complicated, it's just different from what most people do. And that difference, that willingness to do what most people won't, that's where wealth comes from. I want to zoom out for a second because this isn't really about broken things. It's about a completely different relationship with money and value and consumption. Most people are consumers. They see something, they want it, they buy it at whatever price it's being sold for, and they move on. They're participants in the economy, but they're passive participants. They're taking whatever deal is being offered to them. What I'm describing is becoming an active participant. It's deciding that you're not going to pay retail prices just because that's what everyone else does. It's developing an eye for value that exists outside of the marketing, outside of the branding, outside of the story that's being sold to you. When you start seeing broken things as opportunities instead of liabilities, you start seeing opportunities everywhere. You start noticing inefficiencies in markets. You start understanding that price and value are not the same thing. You start thinking like an investor instead of a consumer. And that shift, that psychological shift from "I want that thing" to "I wonder what that's actually worth," that's the beginning of wealth building. Look, I'm going to be straight with you. Most people are not going to do this. Most people are going to watch this video, think that's interesting, and then go right back to paying full price for everything because it's easier and it's what everyone else does. And that's fine. Some people are content with that. But if you're watching this video, I'm guessing you're not one of those people. I'm guessing you're someone who's frustrated with where you are financially, someone who knows there has to be a better way, someone who's willing to do things differently if it means getting different results. The opportunity is there. The broken things, the foreclosures, the distressed assets, the liquidation sales, they're happening every single day. The market exists. The question is whether you're going to participate in it. And here's the thing, you don't need permission. You don't need a degree. You don't need a business license or startup capital or connections. You just need to be willing to look at a broken thing and see possibility instead of risk. So here's my challenge to you. This week, find one thing that's being sold at a discount because it's damaged or broken or distressed in some way. Research it. Figure out what it would take to fix and what it would be worth fixed. You don't even have to buy it. Just do the math. Prove to yourself that this works. Because once you see it, you can't unsee it. Once you understand that there's a whole economy of undervalued assets out there just waiting for someone to buy them and restore them and profit from them, you'll never look at shopping the same way again. And maybe, just maybe, you'll be the person scrolling through Facebook Marketplace at midnight, seeing that water-damaged couch, doing the mental math, and knowing you're about to make $800 this weekend. Thanks for watching. If this changed how you think about money, hit that subscribe button, give this video a thumbs up, and drop a comment letting me know what category you're going to start with. I read every single one. Now go find something broken and make some money.